After we are done with the production, raw material, and the sales budget, now we look at the most critical part, which is actually the cash budgeting. How do you work out? What are the factors that determines the cash budgeting? So in the cash budgeting, we have the following factors to be factored in. It is a cash plan for a defined period of time. So it shows us actually the cash plan. It summarizes monthly receipts and payment. Hence, highlights monthly surpluses and deficits of actual cash. Its main uses are, so how do we make use of this cash budgeting? So because we are focusing on the receipts and payment in terms of cash on a monthly basis, to maintain control over firm's cash requirement, stock and debtors. So this is how you use the cash budget. So you are maintaining control of firm's cash requirement in terms of stocks and debtors to enable a firm to take precautionary measures and arrange in advance for investment and loan facilities whenever cash surpluses or deficits arises. That's another factor to be considered to show the feasibility of management plan in cash terms. Remember, the excess of cash will be a problem. The less cash will be a problem. So we need to strike a balance to illustrate the financial impact of changes in management of policies, change of credit terms over to customers. So these are things that must be utilized in the preparation of cash budget. Factors to be factored in the cash budget, cash receipts. The factors determining cash receipts include cash sales, how much to be sold in terms of cash, payment by debtors. So these are cash received from debtors. The sale of fixed assets. The issue of new shares. This brings in cash into business. The receipt of interest and dividend from investment. So if the business is investing in other activities. Now, what are the cash payment? Payment of cash may be for one or more of the following items. Purchase of stocks. When you're buying stocks, cash will flow outside. Payment of wages or other expenses, you'll lose your cash. Purchase of capital items, this is what you call capital expenditure. Payment of interest, dividend or taxation. If the company has actually borrowed or bought some investment from other companies, then it must pay some interest or dividends. Now there are steps to be followed in the preparation of a budget. What are the critical steps? So the following are a step-by-step process followed in the preparation of cash budget. How do you prepare the cash budget? Remember, all this is about management of cash. Cash management is critical for business operation. So prepare pro forma cash budget monthly by month, month by month. In other words, you prepare the cash statement, cash budget statement, the statement showing how cash is being managed in the business for different months. Then determine the cash receipts. Determine all the cash receipts in that particular month or in each and every month. And the cash receipts can be sales, you've made sales. 2, you've received cash from debtors. And then when you determine other incomes, that's number 3. You need to make sure that you determine other incomes. Incomes like 1, when you sell an item on profit, when you make a foreign exchange gain. So these are other incomes that can be initiated in the operation of the cash receipts. Determine the cash payment. Make sure that you determine the cash payment. You make payment of cash when you're buying stocks. You make payment of cash when you're paying creditors. Establish other cash payment in the month. For example, you're paying for wages, salaries, rent, etc. So these are expenses that you must factor in when you are actually initiating this process. And then compute the difference between total cash receipts and cash payment in the month. Whatever balance you get, carry forward to the next month. So these are the steps to be followed. We have step 1, you must have a format of the cash budget, and then number 2, determine the cash receipts. Number 3, determine other incomes. Number 4, determine the cash payment. Number 5, establish the cash payment in other months. And then number 6, compute the difference between total cash receipts and cash payment. And then finally, whatever balances, which is number 7, you get carry forward to the next month. And you go on and on until you reach the final year, the final month in your budgeting session. So this is actually a simple format of the cash budget, but it's not complete, but I'll give you the explanation. So this is the pro forma itself. This is the format of the cash budget. Normally you write cash budget for the year ended, for the month of this January, February, March. So these are samples. So we have particulars, month 1, month 2, month 3, month 4, until 12 months. Budget, balance brought down, we have the amount. Cash sales, you have the amount. Cash from debtors, amount. Sales of capital items, amount. Cash from loans, amount. Total cash received, you write it down here. Then cash payment. In the cash payment, we have creditors, you pay. Payment to creditors, payment for expenses, salaries, wages, rent. Capital expenditure, you're buying machine, you're buying this. Payment of loans, you're paying for loans. And then you have taxation, you have dividends. So when you total this, you get the total cash payment. So total cash received minus total cash payment gives us the surplus or the deficits, which now you carry it forward. Now our forward is month 2. Same applies. You do the same all the way to the final month of your cash budget. So this is a question that this is the problem that must be solved. So we have a problem here. Draw up a cash budget for this door showing the balance at the end of each month from the following information provided by her for the 6 month ended 31st December 2020. Cash, opening cash $1,200. So B, cash received for the sale after 3rd month following the sales. So these are actually sales. If you look at this table, you'll be able to see the sales. We have the sales for March, April, May, June, July. This is for 2020. And then we have the January, February. So this is actually for 1 year. So January, February to make a complete financial period. And then we have production here. This is what has been produced. We have the raw materials cost 5 shillings per unit. Of this, 80% is paid in the month of production and 20% after production. E, director labor cost of 80 per unit are payable in the month of production. Variable expenses are $2 unit per unit. Of the cost, 50 is paid in the same month as production and 50 in the remaining month following production. G, fixed expenses are $400 per month payable each month. Machinery costing $2,000 to be paid for in the month of October 2020. I, will receive a legacy fee of 2,500 in December 2020. And then finally, drawing to be 300 per month. 300 per month. So every month is making a drawing of 300. So this is a sample of the question that we'll be able to do. Thanks as you wait for the practical in the next session. Thank you so much.